Hey guys, what's up? Welcome back to another video. In this video, I'm going to be doing a third quarter 2022 earnings results analysis for eBay. And we can see that this company is down about almost 40% over the last year, while the S&P 500 is down about 15%. So they are underperforming the market this year, not doing that good. It hasn't been a good year for eBay. So I'm just going to look into their financial statements to get a better understanding of their third quarter earnings results, as well as some of the growth, projected future growth for the company. And then I'm going to end off the video by figuring out what the intrinsic value per share for eBay is, so we can know if this is a good price to buy into the stock from a value investing perspective, because it might have been a bad year for eBay this year, but if the company is able to rebound, then it might be a good idea to buy into the stock at these depressed share price levels. But before we get into that, I found this quick little article here that basically talks about some of the guidance that management for eBay issued out for the fourth quarter of 2022. And if I scroll down here, we can actually see that a lot of different investors have actually lowered their price targets for eBay shares. We can see that for some of them, like Credit Suisse and Benchmark, as well as some others like Cohen, they've reduced their price targets from 56 to 55, 66 to 62, 62 to 60. And then also, if I scroll down here, we can see that the director for eBay, Robert Holmes, actually sold 25,000 shares of the company on Wednesday, October 26th for a total of about $1 million. So his total portfolio now adds up to only about 6.2 million. And then we can also see that the insiders for the company only own 0.17% of the outstanding shares of eBay stock. So that's really not a good sign. Usually if you invest in a company, you want to see that the interests of the company's management and of their shareholders are aligned. And they would be aligned if management was a large shareholder themselves. But in this particular case, management does not own that many shares of eBay, so their interests are not really aligned with shareholders that may be heavily invested in eBay, which is really not that good of a sign. But obviously, as I pointed out at the start of the video, one of Warren Buffett's most famous quotes is to be greedy when others are fearful. So if everybody is fearful of eBay stock at the moment, it might potentially be a good time to buy in, but we'll figure out if that's the case. And so right here we can see the balance sheet reported for the third quarter of 2022 compared to the fourth quarter of 2021. And we can see year over year the total assets for eBay have decreased from about $26 billion to about $19 billion. And then we can also see that total stockholders' equity has declined from about 9.7 billion to 4.8 billion. Their retained earnings line item has decreased from 36 billion to 33 billion, and their additional paid-in capital line item, which usually increases when a company issues more shares of a company or of a company's stock to raise capital to try to finance the business operations. This line item increased from about 16.6 billion to 17.1 billion dollars. And usually a decrease in retained earnings and an increase in additional paid-in capital is not a very good sign. So this balance sheet does not really show very promising projections for eBay's future, unfortunately. And so if I scroll down here to page 5 for their income statement, we can see they're comparing their third quarter results for 2022 to 2021. And year over year, their net revenues have declined by about 5% from $2.5 billion to $2.3 billion. And then we can also see that their net income has declined by more than 100% from a positive net income of about 264 million in the third quarter of 2021 compared to a net loss of about 69 million in the third quarter of 2022. And that came mainly as a result of a change in the fair value of trading securities sitting on their income statement here. So it wasn't really as a result of negativity in the business's operations. Obviously, their net revenue did decrease, but it didn't decrease enough to cause a 100% decline in net income. That mainly came from a change in fair value for their trading securities. Still not a very good sign, though, to see that a company's net income has declined by more than 100% year over year. And lastly, on their cash flow statement, we can see they're comparing their cash flows for the first 3 quarters for 2022 compared to 2021. And year over year, their operating cash flow has declined from $2.3 billion to $1.5 billion. Of this, of the $1.5 billion in the first 3 quarters of 2022, $735 million of that came from the third quarter of 2022, and they had about $633 million worth of free cash flow in the third quarter of 2022 as well. But despite the fact that their business has not been doing that well in terms of business operations over the last year, we can see from their financing activities that they repurchased a pretty substantial amount of common stock in the first 3 quarters of about $2.8 billion, still a decline from $3.9 billion in 2021, so that's not a good sign. But the fact that they're still prioritizing returning value back to their shareholders, even in a year where they haven't really had that much success in terms of operating cash flow or net income, is a good sign to see. And we can also see that payments for dividends came out to be about $370 million for the first 3 quarters of 2022. And so obviously, I mean, from an investor's perspective, some investors would be happy to see that a company is returning value back to shareholders, but others might prefer that a company hold on to that capital to try to reinvest into a company so that the company can actually grow and produce a positive, increase in the return on investment here for their stock price. But it's really a matter of preference. Some investors are different than others. Obviously, on their financial statements, it's looking like it hasn't really been that good of a year for eBay. And so right here, I have my discounted cash flow model to see what the intrinsic value per share of eBay is at the moment. And Yahoo Finance is basically estimating that this company is going to grow at about 5% compounded annually for the next 5 years. They had about $2 billion worth of free cash flow in 2021. They have about $4.78 billion worth of debt sitting on their balance sheet and about 542 million shares outstanding. And so basically, after taking into consideration these different metrics, we can see the intrinsic value per share for eBay comes out to be about $42 per share, which means that eBay is currently trading basically right near their intrinsic value per share. They're trading at $45 per share at the moment. So they are pretty much trading right at their intrinsic value per share. But obviously some investors might prefer, especially value investors who are looking to buy into a company long term, would prefer to buy into a company when they're trading at a margin of safety. So buying it right at intrinsic value per share might not be the best idea for some investors. And then on the right side here, I did a competitor analysis comparing them to some of their competitors, Amazon and Etsy in particular. And we can see from a financial ratio perspective, it looks like eBay has the highest gross profit margin, but in terms of net profit margin and return on assets, they're not doing that good. Etsy obviously has the highest at 21% net profit and 15% return on assets. eBay is definitely lagging behind at only 2% net profit and 1% return on assets. So from a financial ratio perspective, it looks like eBay might not be the buy in comparison to Amazon and Etsy. And then from an intrinsic value analysis perspective, eBay is trading right at their intrinsic value per share, but considering that the main status quo for a lot of value investors is to buy even lower than this, it still might not present the best buying opportunity at the current share price. So I'm not really sure what to think of eBay. It's obviously been a very tough year for them, but I'll definitely be keeping my eye on this stock because their share price has declined quite a bit over the last year. So that could mean that it presents an interesting buying opportunity. But I'd love to know what everyone watching this video thinks about eBay. Is it a good buying opportunity at the current share price? Let me know in the comments section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.